How long has it been since you drew a pickle? 2 days, JFresh. You just don't watch the stream all day, which is disappointing. But I understand it takes a long time to paint your penis green. What time frame are you watching the EMA 160 on the daily? So before June. Oh, fuck. I moved that one too. God damn it. Why are these moving? They're supposed to be locked. Fuck you, WeBull, and your shit charting. Um, so in Feb, we bounced on the EMA 120. In June, we bounced on the EMA 60. Right. We had several bounces on the EMA 60 actually throughout this whole time period, all of which would have been profitable options plays. After that, as price started to consolidate and more shares were offered at market, the EMA 160 became our floor. So our floor was actually theoretically higher than in that manner, and that our average trading price was staying above the 60-day rolling average. But there was a lot of noise from January, right? Here we bounced on the EMA 160 again here before the August run up. And then once again here before this most recent FTD run up. I don't know if we'll hit the EMA 160 again. We may get as low as the 120 though. But any of these bounces on the lower EMAs on the daily are significant. Now we do have a crossover in the EMA 3060. It's a bullish crossover. So it's possible that our price action going forward could stay above that long-term trend that we have that kind of runs right through here. And so it's possible that our floor could ascend into the action expected in November. But yes, a low bounce on an EMA always presents profitable options opportunity in GameStop historically. And you can see that noise and how spread the EMAs were back then, right? Like the amount of spread versus now where they're very consolidated. Will I be taxed on my gains? Yep. You'll be taxed on any profits you take. Do you remember when every 21 trading days GME would have significant spike? This included the quarterly rollover dates and stopped happening around May, but there was a T plus reason for this. Yes. So actually, if you go back and look at this period really specifically, the FTDs were still, God damn it, the FTDs were still so high that on those FTD dates, we ran. And there's your T plus 6 one right here. So even though they were able to stifle price action, we still ran. And even here during the massive share offering, this is an ETF leap date also, very interestingly. But it didn't align well with important dates for GME strikes, and the open interest was low because everyone had just sold out of their contracts, right? But even here in this sea of red, we see that ETF FTDs play out, or the ETF exposure play out on those 2 days. And this is, when 12 million shares were being sold. And we still have two up days, right? We see FTD exposure play out again here and here. And then, we begin we have a slight run here, likely due to the ETF exposure. Again, what we're seeing now, into a small dip right before we take off on the exposure date again. This is played out the same way every time. When they roll, the FTD exposure is significantly lower, but still very, very high. When they fail, the FTD exposure is significant. We were looking for an anomaly in this window, and I think we can confirm that we definitely got one, right? There's just no question about that. Um, and hopefully, the anomaly in the January window is MOASS. God, I love this stock. Bullish as hell. So if I understand correctly, the 300C November 26 weekly example that was like 150 for a contract is $150. Yes, it's times 100. That's share price per share. If the stock tanks, can I lose more than $150? Absolutely not. Is there a DD? Not yet. There isn't. But I will present a DD in the coming weeks or days, ideally, that discusses potential option strategies for different people of different budgets. Clip it.